Welcome to forextrading.com. Now we're going to take a look at two examples of trades on a real life account, and we will discuss what really not to do. And the second example will be classic. I mean, what to do with the market, how to use the market to profit from it. Well, we're gonna use the 4-hour chart to look at the trend. The trend, last small and medium trend shown here, was growing. So we are talking about the uptrend. So we are talking about looking for the long position mostly. Let's take a look at 30-minute time frame. Here we go. So we are talking about this part of the chart is growing trend. It's small or medium trend. That's how I call it. Last significant trend is growing. So we are looking for the transaction to the upside. Here we got continuation pattern. It is better visible like oh, and this kind of pattern show us that we gonna probably come through with the uptrend. So we are looking for long position. But before this happened, we are looking also for important data from the market, which was uh, German zoo economic sentiment. Let me show you what we are talking about. We are talking about this German zoo economic sentiment, which is important data, and it was released 11 a.m. European time, so we are talking about 5 a.m. New York time, and it was much worse than expected. Before this, let's take a look at this section. The data was released at 11 a.m. in European time. And the market before moved a little bit ahead, but it's met this support resistance when the last top was made, less important top, and the trend has changed. After meeting this point, it turned down a little bit, which was kind of double top signal visible on 30-minute chart. So we moved a little bit lower, kind of retracements, you could say, but at 11 o'clock there was this important data released, so it was much worse than expected. It was below the zero critical point, so the market started to jump a little bit lower, then it came back a little bit. It was kind of rapid, small move, hectic. So I've catched this move and took short position because I knew the market's gonna move at least 20-30 pips, or it maybe move a little bit much lower just for a short time, because we have this trend growing, and it could be a bigger move, but just for some short period of time. Well, this kind of the trend, let me mark it for you, is really something that I do not recommend. So I'm not really showing that in the medium and big uptrend you should take the kind of cont trend trades. So it is not really recommended to go short here. And as I thought, the move wasn't so significant, wasn't big, even though it was shown here that the another follow through to the downside can be done, but it didn't. So I took only half of the profit from this position taken. I took it about here, and the other part of the position went with a stop loss at break-even point when I just entered somewhere about here. So this is something that you really shouldn't do if you are not very experienced. I mean, to go short when the market at the medium or small trend is going up. It is not really safe, it is not really logic, so the risk you're taking is very often much bigger than the profit you're gonna take from the market. And this time I didn't lose, but I didn't win much as well. So let's take a look at another another one. This trade here, you see, this looks and it is a continuation pattern. And it was seen at 4-hour chart. This situation like here, the breakdown without follow through was visible after some time when the market came back to the this range, sideways range, this continuation pattern. It came back here. It was already visible at 4-hour chart that it is just only a shadow, kind of fake break, that the market will probably continue moving to the upside because this is a medium uptrend, and it is natural to price to move higher with this kind of trend. So it was seen generally at 4-hour chart, more visible. I mean, you could see it also here that the price didn't stay here long, and it didn't came through to the downside. And we could really, after crossing this point 28.71, we could enter long. So everybody had this chance to go long around here from this 28.71 to 28.89 point, even though it was just before this 29.06, 29.10 level. So even though we could enter here, we would watch how the price will act with this point another time. If it's going to be breaking out to the upside, or it's going to stay around here, or it's going to just meet this point and come back. Well, really, if it would be the second option, I mean, it will go to the 29.06 and came back close. We could close the deal with break-even point because the initial stop loss would be much lower than that. But I really wouldn't risk it probably. But we didn't have this situation. The come through was pretty much fluent, so the market moved strongly, aggressively, and we see it very nice and clear at the 4-hour chart that this candle was something different than this move right here because it followed with this support resistance and broke through. You see, generally also, this is the third meet of the support resistance point. This is the first one the market met this support resistance. This is the second one, and this is the third one. So there was a strong chance that the from this pattern we're gonna break out to the upside. So as conclusion is, the first kind of deal, the first trade, is something that you shouldn't do if you are not really advanced and experienced with the market, because you're using just a temporary, very short temporary situation to profit from the market. It is possible, but it's not really something that I recommend. And this is something classic that you move with a trend when you already had some retracement, but market didn't really react on it. So another buyers came into the market, as it didn't came through the downside, and the move was pretty much strong. Let's say we've met 120 pip profit right now, and it might be growing a little bit more. Of course, if you didn't make it through, I mean, you didn't took the trade when it was pretty much safe and obvious to act like a smart money move, and you might be waiting for this kind of move. The market's gonna come back here at 28.99, let's say 29 something, like here, meet this level and move back up aggressively, leaving this kind of shadow around this price level. So this would be a great opportunity to enter the market one more time, because the market might be testing some level lower after retracing from those high levels after moving 120 pips to the sky. So we might have another second chance to buy some more long positions, or wait for the first moment to make this buy possibility happen. Well, thank you very much. I'm looking forward to see you at daily analysis and more trade examples. Thank you very much for watching this. Bye.